curb the spread of COVID-19 in the country. It will take effect from Wednesday until the end of the month. Now, this comes after the number of cases in Malaysia surged past 500.
Okay, hi, this is the introduction part. So what is a monetary policy? So monetary policy is the encompasses strategy that used by the National Central Bank to regulate the money supply, interest rate, credit availability within the economy. So why central bank using this measure is to achieve a key microeconomic objective such as controlling inflation, fostering employment growth, and maintaining the overall economic stability. So central bank not only use monetary policy as their tools, actually they already using a OPR, OMO to influence the economic conditions. So that's all part of the introduction. As you guys can see here, it is the graph that was already in the BNM website. It shows the OPR during COVID-19. First cut, you guys can see here in 2.5% is actually in the early 2020. BNM made a significant cut to the OPR, reducing it 25 pesos in January and another 25 pesos on March until it became to 2.5%. So there is a further reduction as the pandemic already impact our economic. So the OPR was further reduced to 2% in May 2020. And the further reduction is in the July 2020, it is 1.75%. So the governor of the Bank Negara Malaysia, Tan Sri Nur Syamsiah Muhammad Yunus, was once announced at the Esrawani, that is a Esrawani reference. Since we can see in the graph, in this graph, it is 1.75%. It is the lowest in decades. So not only the OPR, a government also introduced a 6-month loan moratorium to support liquidity and ease the financial burdens on borrowers. So the objective of our slide is to analyze the monetary policy measure implemented by the BNM during the COVID-19 pandemic, including the challenge faced by the Malaysian economy, specific policy enacted, their effectiveness, is it effective to our economic, and the overall impact on the economic.
Next, the challenges faced by BNM. During COVID-19 pandemic, Bank Negara Malaysia faced several significant challenges in its monetary policy implemented. So, firstly, the uncertain global economic environment compounded the challenges faced by BNM. Fluctuation in global demand, supply chain disruption, and fluctuating commodity price required BNM to be highly adaptive and responsive in its policy measure. For example, during period of economic slowdown, consumer and business demand for goods and services typically declines, affecting export-driven economies like Malaysia. Secondly, rapid global economic growth can lead to demand outstripping supply and creating inflationary pressure. The COVID-19 pandemic has worsened the supply chain disruption, affecting the availability of raw materials and finished goods and increasing production costs. Other than that, Malaysian manufacturing sector, particularly in electronic and semiconductor, also face considerable challenges due to global semiconductor shortage. The last challenge faced by BNM is the volatility in commodity price, such as palm oil and petroleum, is significantly impact Malaysia's trade balance and economic stability, which is the price in palm oil and petroleum increase. Additionally, high oil price can increase export revenue but also lead to higher production costs for domestic industry.
So moving on to the policy implemented during COVID-19 in Malaysia. So the former Prime Minister Tun Dr. Mahathir has introduced a 20 billion ringgit financial stimulus package to gain certain strategies to help the economic growth. So the first one is there are a 50% discounts on electricity bills for travel companies, airlines, hotels and shopping malls. There is also service tax exemption for hotels from March to August 2020 to attract tourists to come to Malaysia. And the next one is taxi drivers, tourist guides and all that are related to tourism were given 600 ringgit one-off payments, and all the frontliners were given 200 ringgit monthly as a token of appreciation from the country to the frontliners because they help during the COVID-19. And the next thing is Prihatin Economic Stimulus Package, or also known as ESP. It is worth 250 billion ringgit to protect Malaysian citizens and strengthen the economy. The next package is Pemerkasa, which is to drive economic recovery, support businesses, and provide targeted assistance to the people and sectors affected by the pandemic. Moving on to the interest rate adjustment. So, the Monetary Committee of Bank Negara Malaysia has used the OPR as a tool for the interest rate adjustment. Okay, so OPR is an overnight policy rate and it has been reduced to 1.75% to support the economy that was in a recession. The COVID-19 is a recession in the economy. So it is aimed at decreasing borrowing costs and refreshing economic activity during times of uncertainty and economic slowdown. So the decrease in borrowing costs may make it easier for the borrower to continue serving for the loans. This action will reduce the monthly installment of loans, and lower interest rates might make investors purchase property because as the borrowing costs decrease, it could make it more appealing and encourage more loans to be taken by investors and increase asset prices. As provided in this slide, there is a data of bar chart of the OPR, and you can see that the Monetary Committee of the Bank Negara has reduced the OPR because it is from 2.75% to 2% and also to 1.75% due to the COVID-19 crisis.
Next, I will be presenting about the various liquidity measures taken by the Bank Negara Malaysia, or known as BNM, during the COVID-19 pandemic. One key liquidity strategy was the reduction of the statutory reserve requirement (SRR) ratio. Early in the pandemic, BNM reduced the SRR ratio by 1% from 3% to 2%. It was the lowest reduction, and the primary objective was to preserve adequate liquidity in the domestic banking system and ensuring smooth operation in the financial markets and aiding banks in managing their liquidity. This measure enabled banks to lend more to consumers and businesses, promoting economic activity during the pandemic. Another significant initiative was the Special Relief Facility, or known as SRF, aimed at providing financial help to small and medium-sized enterprises, SME. SME are critical to the Malaysian economy, contributing over a third of the GDP. The SRF was designed to help these businesses manage their cash flow and continue operating despite the economic challenges posed by the pandemic. This funding by the BNM helped hundreds of SME to manage their operating costs, retain employees, and endure the economic downturn.
During the COVID-19 pandemic, Bank Negara Malaysia, the Central Bank of Malaysia, implemented a loan moratorium to help individuals and business manage financial difficulties. So this moratorium, which began in 24 March 2020, allowed borrowers to defer loan and financing repayments for a specified period. Initially, the moratorium was set for 6 months, but was extended on 28 June 2021 in response to ongoing economic challenges. So the moratorium was granted automatically to borrowers, eliminating the need for application or approval process. It applied to various types of loans and financing, including personal loans, housing loans, and business loans. So the policy saw several extensions and modifications to address the evolving economic situation and borrower needs. So the goal was to provide financial relief and support to mitigate the economic impact of the pandemic on households and business. Bank Negara Malaysia enacted targeted economic policies that were critical in minimizing its negative effect on Malaysia's economy. BNM implemented focused financial support initiatives to directly aid impacted industries. For example, industries like travel, restriction, and decreased consumer demand severely hurt the tourism, hotel, and small and medium-sized company sectors. So BNM worked with banking institutions to provide loan repayment moratoriums, giving business time to weather the current economic crisis without having to deal with sudden cash shortage. Second, BNM established broader policies to promote financial stability and market confidence. They provided liquidity to the financial system via a variety of channels, including repo transactions and improved liquidity management tools. Lastly, BNM also collaborated closely with the government to put fiscal stimulus plans into place that supported monetary measures. So this package comprised wage subsidies, direct cash transfers to underprivileged people, and investment incentives designed to boost domestic demand and assist critical business.
Okay, for the analysis, according to the graph, Bank Negara Malaysia data report states that the overnight policy rate OPR for the first quarter of 2020 during COVID-19 was 2.75% in January and 2.50% in March. In May, BNM reduced its OPR to 2.00%. But beginning in July 2020, BNM reduced OPR to 1.75%, is the lowest level in recent history. Throughout 2021 and 2022, BNM kept the OPR at 1.75% from July 2020 until March 2022 to support the ongoing economic recovery and ensure accommodative financial condition. However, in May 2022, BNM slightly increased the OPR from 1.75% to 2.00% as the economy slowly faced recovery. Additionally, during COVID-19, the GDP decreased, which led to reduced economic activity. This decline was particularly pronounced in sectors heavily reliant on physical presence and consumer spending such as retail, hospitality and entertainment.
I'll be discussing the effect of Bank Negara Malaysia BNM monetary policy during the COVID-19 pandemic. Let's start with the maintaining financial stability. Throughout the pandemic, one of the BNM key priorities was ensure the financial stability. Maintaining financial stability ensure that citizens continue to have access to an essential financial services, including credit and liquidity. These services were particularly vital for households and businesses facing financial difficulties during the economic disruption caused by the pandemic. It is also allowed banks and financial organizations to keep lending to individuals and companies in order to sustain the economic growth and aiding in the recovery process, as well as help them to manage their financial obligation during these challenging times. Supporting economic recovery is also one of the effects from the BNM monetary policies. The government was able to refocus its support towards initiatives that promoted a long-term growth. This also included investment in technological adoption and also innovation, ensuring that profitable businesses could thrive. Programs like the Special Relief Facilities (SRF) were instrumental in helping businesses continue their operation and prepare for the post-pandemic phase. Lastly, let's discuss how BNM monetary policy helped to mitigate the impact of the global economic downturn. During the COVID-19 pandemic, while Malaysia's GDP did decline by 5.6% in 2020, the effects were not as severe as they could have been thanks to this intervention and policy initiative. Even though it is declining, but it is important to note that this decline would have been more worse without any measure in place. This demonstrates the effectiveness of BNM monetary policy in controlling the economic against the world impact of global downturn.
6.0 Monetary Policy Instrument. Monetary policy instrument got a currency intervention is known as foreign exchange intervention or currency intervention. Refer to the action taken by country's central bank or monetary authority to influence the exchange rate of its currency in the foreign exchange market. This intervention typically involves buying or selling its own currency against other countries in order to achieve a certain objective or manage exchange rate. Okay, second, statutory reserve requirement (SRR). This refers to the percentage of deposit that banks are required to hold in the form of reserve, either in cash or as a deposit with the central bank. By adjusting the SRR, the central bank can control the amount of money that bank can lend out. In addition, open market operation In the short form, we call it as OMP. This is involved buying and selling government securities bond in open market. When the central bank buy the securities, it inject money into the banking system. Conversely, by selling securities, withdraw money from the banking system. Lastly, interest rate. The central bank set the overnight policy rate. We call it the OPR, which is the interest rate that which bank lend to borrow from each other on overnight basis. Change in the OPR affect other interest rate in the economy, influencing borrowing and spending. Thank you. For conclusion, during COVID-19, Bank Negara Malaysia implement a proactive monetary strategy to keep the economy stable. Interest rate reduction, liquidity injection, and regulatory tweaks were used to assist firms and individuals, thereby easing economic downturns and encouraging recovery. That's all.